Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to the program. I'm Stephen Grootes. A strong comment today from the Deputy Finance Minister, David Masondo. He said at least two things I thought were very important. The one is about inflation targeting and what the inflation target will be. And we'll speak to Dr. Goolam Ballim in a little while about that. I thought it was a very important comment. The other is that he is very clear and very confident that Budget 3.0, which is what we all call it now, will go ahead next week. There will be no Budget 4.0 is the way that he put it. I'm very pleased to hear that, because what we really need at the moment, and I suspect politically what the coalition government may need, is a very, very strong signal, strong confirmation that they're actually in charge of things, that they've sorted it all out. Of course they haven't, but they need to send a signal that they have and that they're actually ready to go. That's really what needs to happen now. And until that happens, we're not going to see much confidence in our economy, because no one really knows what's going to happen with the coalition. My gut suggests actually that it will go ahead and that Masondo is right. And I don't think he would say it if he wasn't confident, or he didn't have reason to be confident. So my sense is that it probably will go ahead. And that's certainly, if I had any money to put on it, and I'm not a betting person, I would put money on that. And that's the way that I would go. Interesting conversations coming up this evening around car tracking services. And Karoo, that their choice of name, not mine, essentially saying that they're seeing a big increase in subscriptions for CarTrack. You want to know what CarTrack does? I think it's in the name. And I'm just intrigued if there are any differences between what the market wants in South Africa and what it wants in Southeast Asia, whether they want different things or not. And that's actually quite an interesting question. I mean, you want a car tracking service to be able to tell you, firstly, where your vehicle is if it's been stolen. Secondly, if you're running a fleet, you want to know where they are, how long they're going to take to get to a certain place. You might want to also sort of monitor the driver, speeds, things like that, and driving, sort of how the vehicle is moving around. But I wonder if there are any regional differences. People might need to know different things. A huge amount of data you could get from these services, of course, to see how quickly vehicles are moving through different places and whether or not they're moving in the same way in different countries. Good to hear from you tonight on 011 883 0702 021 446 0567 and voice notes on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
We start tonight with the extraordinary claims being made by the company Masondo Mining. They say their share price is being manipulated, that people are involved in what is sometimes called naked short selling of the stock. The JSE denying that there's manipulation. At the same time, Masondo shares have been very actively traded. More than half of their shares have been bought and sold in the last year. David Shapiro is a veteran stockbroker, chief global equity strategist at Sasfin. David, good evening. Always good to talk to you. There's clearly something kind of odd going on here, but market manipulation, surely that's a very big claim to make.
Stephen, there's been no proof of that yet. I think there's a lot of conspiracy theories. I try to go through all the data that is, or the SENS announcements and that. And I think it's best for people to come to their own conclusions to explain what these SENS announcements are all about. The stock exchange haven't made any clear statements themselves. So can I just try and explain what's happening? Yeah. So, when you deal on the stock exchange, when I buy shares from somebody else, the stock exchange guarantees delivery. In other words, they're in the middle. And if I buy, they have to guarantee that I will get delivery. And likewise, the seller, if someone buys the shares or sells shares, that that you will get money for the sale. So that's how it works. It's done electronically. In the olden days, we used to do it by script deliveries. You'd have a piece of paper that went around, the stock exchange. That's why you had to have your offices within 1 kilometer of the stock exchange. Now it's electronic. So to put it in perspective, if you deal in our firm, you want to sell shares, it will tell you that we've got the shares. Alternatively, if you haven't got the shares, it won't let you sell. Now, Stephen, sometimes things go wrong because institutions don't only deal with one broker. They have a central, they might have a bank that does their delivery and who will take care of any sales. So what could have happened, I'm going to give you 2 different scenarios. What could have happened in this situation is that somebody sold shares that they never had. So what do you do in a situation like that? The stock exchange guarantees delivery. So it's got to go around now and kind of borrow shares or get shares so that it can guarantee the delivery, and once you borrow shares, it's like any kind of loan agreement. You put a time on, I will repay you these shares. Not in money, I will give you back the shares that I borrowed from you. There's some cash guarantees that you have to put up against it. So if you're if you're on track with me, what happened in this instance is that obviously Standard Bank and the stock exchange approached 2 big shareholders in an effort to borrow the shares, obviously to help affect delivery of a trade. Now, and that's caused a hoo-ha and caused suspicion and so on. There is another area that I'll bring up now, and that's short selling. Okay, so short selling means that you can sell shares that you haven't got. If you believe a share price is going to go down from where it is at the moment, you can sell those shares with a hope of buying back. But even when you do a transaction like that, you've still got a guaranteed delivery. So what you do is then you'll go around to various institutions and say, I want to go short of this mining company. Can you lend me the shares? I'll give them back to you next week and I'll buy them back. I'll give them back to you next week and I'll pay you 1,000 Rand or something like that. So that's another instance in which this could happen. So trying to read through the census announcements, no one's clarified what led to that 1.8 million shares that they were looking for. Was it a mistake, an incorrect trade, or was this a naked short sale, which is actually illegal? You're not allowed to do that because you've got to borrow the shares before you do a sale. So there was something amiss, which no one has explained. And I think that's led to all these different theories and claims and so on of manipulation and etc.
Presumably, sorry, David, there's an electronic trail. You should be able to know, like you would have been able to follow the handwritten scripts.
Yes, there is a trail. There is a trail. But no one's giving us a trail to make the conclusion. So what happened? And that only the stock exchange can tell us. Or the broker, the agent, it could have been Standard Bank themselves, something went wrong. So it was either an undisclosed bear sale, which is illegal, in terms of the stock exchange, in terms of their regulations. And I think the Stock Exchange Act is a act of parliament, so it's illegal to do that. The second thing is that it happens all the time. You might want to sell Anglo Gold and by mistake you put an order on for Anglos or something like that. These issues do happen. But it's very confusing. I think a lot of fuss has happened, but I'm a little surprised that the stock exchange hasn't hasn't openly explained, look, this is what the reason, which has led to all these different kinds of theories.
David Shapiro, really appreciate the time. Thank you. Veteran stockbroker, Chief Global Equity Strategist at Sasfin.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, an announcement today from Sasol and discovery of a new product. It allows a company to buy renewable electricity, receive their power through the national grid, and to do it on a month-by-month basis. In other words, you could use it for May, but not for June. Andre Nepkin is the head of Discovery Green. Andre, good evening. You're calling the service Amply Energy. How does it work?
It's actually quite simple. It is basically taking the whole mechanism of wheeling, which is basically what we all do as consumers of energy, and using renewable energy from the biggest plants around the country, and giving access to small businesses to that energy. It's a very simple mechanism. The way Ampli really works, and Ampli Energy, is a collaboration between us and Sasol, whereby we are giving small businesses, SMEs and low energy users, access to these large utility-scale renewable energy plants, but not on a 20-year or a 15-year basis, on a month-to-month basis. And I think that is something the market desperately needs.
Why only businesses? I mean, are you starting something here that's going to end up in homes? I mean, it'll be like the British market or other markets where you can do the same thing.
Never say never. I think it is definitely a future for South Africa. We are, a few iterations away from that. It will take time to get there. It needs a bit more of a sophisticated metering infrastructure and a lot more energy being added onto the grid. But I don't think it's unreasonable to foresee a future that plays out like that.
The way in which we are doing this for us in South Africa is relatively new. The metering equipment is relatively new. It needs to be metered where it enters the network, needs to be metered where it goes into the company, all of those things. Are you confident, Andre, that's a big if in a way, because you don't always control all of the infrastructure through which it is actually wheeled. Are you confident all of that's going to work? It'll be reliable?
I think so. Wheeling is something that's already been done across South Africa. The large energy users, your mines, your smelters, it's already being done. The whole point of it is to stimulate more generation and add it to the grid so that the grid can make more money, so it can sustain itself and build more transmission line. So I don't think there's really an alternative. And yes, sometimes things do fail, but adding on more generation allows more toll fees to be collected along the way and helps to develop that grid, which I think is then good for everyone.
A month-by-month basis, doesn't that make it harder for you to be sustainable? I mean, you could have something go wrong in a month, lose a huge number of customers. You have obviously agreements with the people who produce the power. Does it make you vulnerable in any way that there's such short-term contracts? I mean, they're great for customers, don't get me wrong. I'm sure they'll encourage a lot of people to come on. But is there a little bit of a risk for you and Sasol here?
No, you definitely think so at first. I mean, your first reaction is say, listen, these plants are usually 20, 25-year contracts. And the reason they're that long is because you've got to bring the price down to make it affordable, to make a saving for people, because that is the big reason for the drive for it. What we've done, and that's why Discovery Green and Sasol have partnered on this, is Sasol's got a lot of generation already, and Sasol is a massive captive consumer of energy on this. So, you're assuming that you won't be able to evacuate that energy or give it to someone, I think is quite small. You need someone to take that risk and be behind it, and that's where Discovery Green and Sasol comes in. And if someone's willing to take a risk on building out this market, I think it's a good thing. And we've done that now for 450,000 megawatt hours that we're dedicating to this month-to-month market. And we've really streamlined the process of which businesses can access. So, and this is another, I think, valuable feature here, is that it doesn't work the way usually works with wheeling. Is renewable energy, we're procuring at a cheaper rate, and because of that saving that we generate, we just simply pay that saving across to SME. So there's no payment to us. By signing up, we just deposit something in your account for helping us grow this market.
Andre Nepkin, thanks very much indeed. Head of Discovery Green.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
For the Deputy Finance Minister, David Masondo, telling an investment conference today, an announcement about a possible change in the Reserve Bank's inflation target will be made very soon. The National Treasury has said it's examining lowering the target from where it is now at between 3 and 6%. The Reserve Bank Governor, Lesetja Kganyago, has made it clear he does want a lower target. Dr. Goolam Ballim is the Chief Economist at Standard Bank. Goolam, good evening. We know the Treasury, the Reserve Bank, they've been working on this. Could we get an announcement very soon, maybe even during the budget next week?
It does come as a surprise, Stephen, that seemingly is imminent, which is the vocabulary being quoted as emanating out of the Deputy Finance Minister. Of course, the Reserve Bank Governor, as you mentioned, for a little bit more than a year now, has been pushing hard at this idea of lowering the inflation target. The market was surprised to the extent that the market did not anticipate it being imminent, hence the quite burly move in the rand stronger this afternoon.
I mean, one of the issues around this, if an announcement is imminent, is that, as I understand it, and Professor Raymond Parsons has made this point, when the current inflation target was set, I think 25 years ago now, there was public participation. People were asked about it. The unions, as much as they don't like inflation targeting, were asked. This hasn't happened this time. Would it be dangerous to go ahead with a change without consultation?
So you're correct in the sense that when inflation targeting was introduced in 2000, the idea was certainly floated in the public domain. It was also a very popular...
Oh, Dr. Goolam Ballim, are you with us?
...of my policy work in the 1990s.
Yeah, I'm just going to ask you to move around if you can for a second. This is an important conversation, and I do want to continue with it if we can. Let's just see if we can just improve this line for you and go from there. But I do think that there are important conversations to have around this. The issue of public participation might well come back to bite the National Treasury if, in fact, people are not properly consulted on this. And I do think this is something that we need to investigate as well. I must just tell you, one of the reasons I think we've had a few connection problems is that load shedding does lead to connection issues. Goolam, you're back with us now. We were asking about public consultation. How important is that?
So certainly when it was first introduced, given the substantiveness of the switch from what was previously described as an eclectic monetary policy towards this inflation targeting framework, you could argue that consultation then was pretty important. However, I'm not going to dismiss the notion that the public should not be taken into the central bank or National Treasury's confidence. But that said, the independence of the Reserve Bank should be allowed to allow it some leeway in being able to push inflation target lower. And the difficulties, of course, with this notion of a lower inflation target, there may be some growth sacrifice. And I think there certainly will be pockets of society that will say the growth sacrifice and call it, let's say, 0.5 percentage point over the following 12 months following an inflation targeting lowering experiment could be too much when growth is weak and South Africa's socioeconomic status is fragile. So to some degree, yes, public consultation, you could argue, speaks to the democratic nature of framing and shaping monetary policy. But at times, sometimes you need to be slightly more assertive, particularly when you are pursuing a long-term goal, which can be net positive in an environment where there is going to be some near-term costs.
Goolam Ballim, thanks very much indeed. Chief Economist at Standard Bank.
The Money Show.
The Markets.
Rudy van der Merwe's Portfolio Manager at AdviceWorks. Rudy, good evening. Quite a late update today from Sanlam and seems quite positive.
Evening, Stephen. Yes, it was certainly positive. Operational update for the first quarter, so comparing the first quarter this year to the first quarter last year, and their net result from financial services is up 15%, and I think 18% in constant currency terms. So that certainly is an attractive result in I think quite a difficult and volatile environment. Operational earnings are up 22%, and new business volumes are up 15%. So it really does look like a strong sort of all-round result. I think the one area which seems to be lagging somewhat in terms of new business growth is life insurance, which was up about 4%, but they do speak of that coming off a very high base, so they possibly shouldn't be expected to increase quite at the same rate as the other businesses. But yeah, the general insurance business is up 49%, investment management up 16%, and life insurance and credit in the region of 6 and 7%. But it is a strong update, and they have increased their exposure to the Indian businesses, to the life insurance business. There is now about 49% just under 50% of the total holding, and then asset management up to 35.5%. So it bodes well, I think, for further growth down the line.
An earnings update from Southern Sun. I got quite excited when they said there's been a notable increase in business in Gauteng. Nice to see some good news in Gauteng for a change.
It absolutely is. Yeah, they're talking about earnings being up 31 to 35%. There's not a lot of detail here, but they're talking about increased demand for conferencing facilities and business travel and the like. So, yes, that is positive. Long may it last.
And then Barlow World still battling their Russian unit, obviously under heavy sanction, all of that being very difficult.
It seems, they continue to struggle. Barlow has had a tough number of years behind them. They haven't been helped, obviously, by the Russian exposure and allude to that being the reason for pressure on earnings at the moment. They're talking about earnings being down a further sort of 19 to 23%. Not particularly good news. And as I said, this is on the back of already a couple of successive, quite poor earnings reports from Barlow.
Rudy van der Merwe, thanks very much indeed. Portfolio Manager at AdviceWorks.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
It's been fascinating watching the comings and goings at NAMPO, the agricultural show in Bothaville. And today, the Deputy President, Paul Mashatile, again, I thought good politics. We saw the President, President Ramaphosa, there earlier in the week. Today, the Deputy President, Paul Mashatile, went, spoke, and then went and essentially laid a wreath in what I imagine was quite an interesting moment at a memorial for farmers and farm workers who are the victims of crime. And just if you consider the current environment, I don't think anyone demanded that the Deputy President do it. I don't think there was anyone who was shouting and screaming for it. Just the fact that he went of his own accord and did it, I thought that was very good politics. At a time when we're seeing people claiming that many people are not feeling a part of South Africa, a lot of this is being stirred, of course, in the US, the US president saying things that are not true, etc., etc., etc. I thought what Mashatile did today, but no matter how you see it, was a very good and clever political move. I wonder what's going on in the ANC at the moment.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
The tracking and logistics company Karoo confirming today its operating profit increasing by 30% to nearly 400 million rand. It says the number of subscriptions to its car tracking service CarTrack is up by 17% over the year. Subscriptions to its Karoo logistics business up by 16%. The founder CEO is Zach Callisto. Zach, good evening. Nice to talk to you on the Money Show. Thanks for the time. You're seeing very strong growth in your CarTrack service. Looks like quite sustained growth too. What do you think's really driving that?
Hi, Stephen. Thank you very much for having me on your show. I think fundamentally, we've got a track record of execution for 20 years now in South Africa and in the other geographies that we operate in. And I think it's really just in keeping with our track record. And obviously, as you grow at scale, you need more and more people that can execute. And during COVID, it was quite difficult for us. We had a very difficult time, but despite that, we still grew and had good profits. And post-COVID, I think we're just now really, we're just coming out of all the COVID effects where people are coming back to work. Everybody's got to work from an office. And I believe we'll see this momentum into the next financial year as well.
There is competition in this market. There are other people who provide a service very similar to yours. Are you growing at their expense, or are these new customers? Is this a new market?
I think it's a bit of both. I think it's, there's a lot of greenfield opportunity, and we probably are taking some business from our peers, but I think that there's both opportunities.
You're also growing in Southeast Asia. Are you seeing growth at the same rate that you're seeing here? Are they both moving sort of in tandem?
And the growth in Southeast Asia is approximately double the growth that we're seeing in South Africa, especially if you measure it in subscription revenue growth. And obviously, at this point in time, our increase in profitability in Asia is very strong. because certain of the operations are only now starting to become really profitable. And obviously, if you look at the profit year on year, that's, it's quite exponential.
Obviously, the main use for tracking a car, I think first people think about what happens if it's stolen. If you're managing a fleet for a company, you want to see how people are driving, you want to know where your vehicles are, etc., etc., etc. Do the two markets here in Southeast Asia want pretty much exactly the same thing, or are they using your devices for different things?
In South Africa, we've got two segments. We've got one which is the corporates, the commercial customers, and then we've got the consumer. In these other markets, there is no consumer market because they don't face the challenges that we do face here. So it's fundamentally the challenge there is how to improve your business. So we help them to improve the efficiencies of their vehicles, the efficiencies of their warehouses, the dispatching, the receiving of goods, the improvement of the staff on the road, their salespeople on the road, their nurses on the road. There's many different industries having quite different requirements and quite complex requirements, and we address many sectors. So the tracking of a GPS tracking, that's something we used to do about 15 years ago. That's, if you come with that sort of technology now, you're dead in the water.
Cars are changing, and they're going to be built with the technology. They're going to be built around the technology rather than the technology coming on afterwards. How's that affecting what you're doing? I mean, are you going to find that actually the car companies themselves will provide the services that you're currently providing? If I was, making Tesla, I would obviously want to provide the tracking service myself to customers.
I think what we do and what the motor manufacturers do is quite different. So the motor manufacturers, their intent is really all about the maintenance of the vehicle and the safety of the vehicle. What we do is something quite different. What we do is actually do integrations into the softwares of the company and increase their productivity, reduce their costs, have full visibility of their fleets, their warehouses, that whole integration. So we're more on the side of helping a business, helping our business owners run a better business. That's really what we do. And in terms of the consumer, it's very much around mitigating the risk of theft. And I cannot see the OEMs wanting to get involved in that part of the business.
Zach Calisto, thank you, CEO of Karoo.
The Money Show
with Stephen Grootes.
Well, confirmation from the presidency overnight. President Cyril Ramaphosa will be in Washington next week for a working visit with the U.S. President Donald Trump. There will be a meeting between them at the White House. You know the context, of course. Trump has been lying about South Africa, lying about our policies, at the same time implementing tariffs on our goods and goods from other countries. The spokesperson for the presidency in South Africa is Vincent Magwenya. Vincent, good evening. Good to talk to you again. We all know how difficult this situation is. What is President Ramaphosa hoping to do next week?
Well, good evening, Stephen, and good evening to your listeners. Stephen, this is an opportunity to research this strategically important relationship between South Africa and the United States. There are areas of alignment and opportunity to enhance and expand trade between the two countries, just as much as there are areas of issues that are in dispute, which we hope to clear once we have the opportunity for the two heads of state to engage.
I hate to put it so bluntly, but I don't get the sense that President Trump is interested. I realize that he must be in a way because he's invited the president. President Ramaphosa couldn't go without an invitation. But we've all seen what happened to Zelensky. We all saw how he told Mark Carney that Canada should be part of the US.
Well, Stephen, we are not burdening ourselves with negativity based on what we've seen in the past. President Trump has given strong signals with respect to his interest in Africa from a trade perspective. And so we're going to seize that opportunity, number one. Number two, we are concerned about what he has been told and led to believe about South Africa. We have sought to clarify those issues. the President will once again affirm the true state of our country. And we hope that we can move on from those issues and focus on how do we grow bigger the basket of tradable goods between the two countries.
So the view of the presidency is that President Trump's understanding of what's happening in South Africa can be changed.
Well, Stephen, it will not be an event. It may be a process over a period of time, but what is important is that we get to a point where we are able to say the relationships have normalized, and we are able to comfortably say the strategic relationship, albeit with one or two points of dispute, is forging ahead.
It's a very difficult situation for the president and I imagine for yourself, Vincent. I mean, I have a lot of sympathy for people who have to deal with President Trump, and everybody watches it. There's quite a lot of reporting, a lot of it from Business Day, around what might be on the table. Are we going to be going there? Is the presidency going to be going there with a sort of proposed trade deal? Let's trade in these things. Let's do this. Is that how it's going to work? Let's trade and make money from each other?
Well, Stephen, we will express appreciation for having been able to participate in AGOA. We will express our interest in seeing AGOA extended and South Africa's continued participation in that regard. However, we will be ready to engage over a new bilateral trade framework that we believe will be mutually beneficial. And indeed, the U.S. has goods that it wants from South Africa. We've identified areas where we can expand and grow trade. I just can't get to the details now until those discussions have happened. And so, yes, we will be taking what we believe could be a new exciting opportunity in the trade relationship.
Could that involve gas, as Business Day is reporting? Essentially, we are going to need more supplies of gas. The US does have companies that specialize in that. Is that going to be on the table?
Let's say the energy sector, Stephen, will be part of the discussion, certainly.
Okay, you put that very well. The Trump administration has been very scornful, critical of the G20. We're hosting the summit here. And the theme of the summit is solidarity, equality, and sustainability. Basically, the three things the Trump administration hates the most. There was some important reporting from Washington Post yesterday that the Trump administration was going to tell U.S. agencies they shouldn't work with the G20 summit at all. Do you think the G20 summit is going to have to continue at the end of the year here in Johannesburg, but without the U.S.?
Stephen, it's important to point out that those reports cite unnamed sources. We are yet to see anything official, either via social media channels that are popular and are utilized the most by U.S. authorities, or in a form of a statement. Secondly, Stephen, we are aware of the U.S.'s disagreement with our theme. They're part of the Troika. They've been fully involved in all G20 processes, and we continue to work alongside them. There's been an acceptance that they hold a different view with respect to our theme, and we've both, as countries, accepted that. What we are looking forward to is President Trump taking up the invitation to come to South Africa, receiving that handover of the G20 presidency, seeing our beautiful golf courses, and confirming that we're not running around killing people of certain races.
It'll be interesting to see if there's a couple of rounds of golf. Maybe Ernie Els can be prevailed upon to come and play here again.
Absolutely. We can only hope, Stephen.
Vincent Magwenya, thanks very much indeed. Spokesperson for the presidency. Listening to that, the Independent Political Analyst Khay Sithole. Khay, good evening. I understand Vincent Magwenya's position, but I am not convinced that President Trump's view on South Africa can be changed.
Well, I think what we are really dealing with is the fact that those instigators of this fiction about South Africa seem to have an inside track into the White House, in the sense that even facts that are published and pronounced don't seem to sway Donald Trump. And I think even as recently this week, you could see that he's doubling down on his conviction that there is some mass genocide happening here. And I think what is important about the president's visit next week is that ultimately, in the absence of an ambassador, it's very clear that we're never going to get that type of inside track. And that type of inside track requires a president who can actually be in the Oval Office, sitting with Trump himself across the Resolute desk and then explain what this is. And of course, if that fails, it fails. But I think we are playing our ultimate trump card, no pun intended, and this is really something that we must hope works out, because ultimately it is remarkably damaging, continuously damaging for South Africa to keep getting cited as some site of genocide that absolutely no one else has witnessed except for Donald Trump and maybe Elon Musk.
It's interesting because if you look at the personalities and the position of South Africa compared to other leaders that have had to sort of sit in that seat in the White House, in the Oval Office. So Mark Carney from Canada, his economy is completely intertwined with the US. Vladimir Zelensky, the president of Ukraine, who lost his temper as he was bullied in the Oval Office, his country completely dependent on the US for intelligence and military support. President Ramaphosa, very different, incredibly able and experienced politician, has an almost unique ability, from what I can see, to give a display of controlled, calm aggression, and is leading a country that would probably cheer if he were to stand up to Donald Trump.
Yeah, I mean, we've seen an illustration of that as recently as, I think, this week, when he said right next to Paul Kagame and everyone expected flames. And then he said, well, the reason I'm the president of South Africa is because I'm the grown-up in the room. And he's always had that particular viewpoint. I think, obviously, there will be two parts to this. There is behind-the-scenes conversation that the two of them or perhaps their advisors have. And then there will be the press conference where obviously the questions will be fielded, and the issue of how Trump responds to those, whether it is in line with what he has been we would have been told by the president, or whether he still insists on maintaining the narrative. I think that will be the litmus test for the success of this particular meeting. I do not expect to see it escalating to the levels of what happened with Zelensky, simply because President Ramaphosa is the type of man who will rather retreat instead of escalating the tensions, knowing very well that South Africa, unfortunately, will come out second best in a world of disinformation, and where facts have become as negotiable as they are whenever Trump is dealing with issues of this nature.
Khay Sithole, I really appreciate the time. Thank you. The Independent Political Analyst. It's all going to happen on Wednesday next week. You'll probably want to watch and listen to that live. You're with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good to have you along with us for the second hour of The Money Show. I'm Stephen Grootes. Plenty to come in the next little while. We will be talking about what happens when data from cryptocurrency exchanges essentially goes wrong, gets hacked. We've seen this start to happen. There's going to be big, I think, important conversations to have around this. We'll also talk about small businesses and next week's budget. And then don't forget, in Investment School this evening, we spoke to Greencoat Energy earlier in the week. They're listed in indices in Europe and Ireland and Britain, and they now want alternate listings here. How does that work? Why would you come to South Africa looking for capital, especially if you look at the exchange rates? We'll have those conversations in Investment Schools tonight.
702. Stephen is on The Money Show.
6 to 8 p.m.
I saw Afrimat today. They're a sort of mid-sized mining materials company. They had results out, and they've had a difficult time. But I was interested that one of the reasons they said that their performance was pretty poor, and it had been expected to be poor. There was no surprises. The environment is very difficult. But they did blame our export railway lines, particularly when it comes to moving iron. And I thought over the last little while, most of the mining companies we've spoken to have been quite upbeat about the railway system. Things are not where they should be, getting better, kind of. I don't want to speak for them, but to sum it up. So I was just interested that for Afrimat, that's not the case. They say that, in fact, it's hit them very, very hard. There may be a size issue. They may just see it differently, maybe the position that they're in. But just a reminder of how much needs to be sorted out when it comes to our infrastructure. And I say that on the same day that we are at stage 2 load shedding once again for, I presume, the last time this week. That's certainly what Eskom has said. There's still just a huge amount of work that needs to be done. And the thing about load shedding is that when Eskom said a few weeks ago they were pretty confident they'd get through winter without load shedding, and I think it was Professor Valipariachi, who said no, there will be load shedding, and he's been shown to be right. Others said it too, that there are still big problems within Eskom. The one thing that hasn't happened yet is that there's been load shedding during the sort of productive time of the day. But load shedding, I think, might start to be a slightly bigger story than it has been for the last year or so. 011-883-0702, 021-446-0567, and voice notes this evening on 072-702-1702.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, one of the great advantages, we're told, of cryptocurrencies is that your information is safe, that it's unhackable, etc., etc., etc. But there have been cases where some of the companies involved in this have been hacked. Coinbase confirming its systems were breached, customer data were being stolen. They're compelled by law in the US to say that. Our information regulator, Phansi Tlakula, she's receiving now 150 data breach notifications a month. That's a lot more than she got when the office was started. Siphumelele Zondi is our tech expert. Siphumelele, good evening. Let's start with the Coinbase story first. I'd like to think a company like this is pretty good when it comes to cybersecurity. What happened?
You think so, right? Hello, Stephen. It seems like it's their own staff members, because what they're saying is that it seemed like there was a case of bribery that took place where hackers bribed some of their staff members in order for them to gain access into their systems and then take quite a huge number of their customers, of their clients' data. Information that pretty much is just about everything that you can think of, from addresses to, they say, the last four digits, if you're American, social security numbers, so the last four digits of the social security number, and other information there as well.
Have they said if anyone actually lost money? Did anyone lose their investments? And this would be one of the key things. I mean, no one wants to have all of the personal information you've been talking about published, but losing money does take it to another level.
They haven't said if anyone has lost money, but what they did say is that the hackers have now gone ahead and made a ransom demand of $20 million. So it's not clear what it is that they want for this $20 million, because we do know that data has been stolen. Maybe that could be the trade-off. If they then can access the systems, maybe they can then start to move monies around and to move that crypto around that Coinbase is in the business of.
This business of international hackers, you often don't know who you're dealing with. They steal money, they steal data, or they lock you out of your system. They demand a ransom. They sometimes go public and tell people. They've spoken to journalists about it. I mean, it's an incredible business. It's grown hugely in the last few years, and it seems almost everyone is vulnerable to it. I can't see what is actually going to stop this from happening.
It doesn't seem like anything is going to stop it from happening. So it's basically just about every organization's duty to make sure that they firewall their businesses a bit better and have encryption software installed and do regular security checks, right, in order for them to ensure that nothing has been stolen or there are no leaks in the system or they're not vulnerable to anything, because sometimes it's something as basic as phishing expeditions, right, where one employee just clicks on a link they shouldn't have clicked on because they don't know that they shouldn't click on it. Maybe that's also another thing. Maybe the training of those employees also needs, of just about every employee of the organization, and not just, because what's been found in the past is that they would focus on the core individuals and maybe IT, forgetting that it could be just about anybody who uses the system of the organization. You click on a link, suddenly they've breached the whole system. It doesn't seem like it's going to end. In fact, according to Phansi Tlakula, as you said, it's increasing in South Africa, because what she quoted was that they are getting about over 150, it was about 156 every month of individuals or organizations that are trying to figure out if there has been a data breach or reporting some sort of data breach. That's up from about 56 about 2 or 3 years ago. So that's an increase of about 100, right? Inquiries that go to the information regulator.
I mean, I suppose the other question is what is the nature of it? Is it personal information? Is it financial? Is it money that's being stolen? If it was money, I think we would kind of know about it. It's a big jump. I know people are also getting used to the idea of having this office to complain to, but it also suggests that lots of companies are not really doing what they should. I mean, when a company is found to have this problem, what are the repercussions? They must be quite serious, or I'd like to think so.
Well, it should be serious because when you think about this, let's start with the consequences, right? Where I think of Transnet, right? A couple of years ago, when you would see trucks docked at the harbour because they couldn't get goods in there, nothing was leaving because they'd suffered a data breach. So basically, work is not going on, goods are not moving in that particular situation. There's then the loss of trust, right, from your clients because they're expecting that you protecting their information. They're expecting that you're protecting their money. So it starts there. But also then, maybe that's where we need to get to what should the repercussions be. Because if you haven't protected your clients, because your clients, yes, can leave, but there should be bigger repercussions for the organization itself because it opened itself to these vulnerabilities. But another thing is that as technology advances, so do the hackers as well. So this is also why organizations need to realize that as new technologies come into being, they also need to be constantly doing retraining and finding out what some of the latest technologies that can seal off their systems a bit better need to be. I don't think organizations can 100% foolproof that they don't get hacked. That's I don't think that can happen, but because sometimes there can be those minor leaks, but constantly find out what new technologies are there and seal it a bit better.
I suppose, okay, if you can't protect yourself, you've got to manage yourself in a way in which you know this is going to happen or that it is likely to happen. It's a whole entirely different way of doing business, and no one is going to want to be the customer of a company that is pretty much honest about it, and yet there may be no other way.
And no one is really honest about it as things go because we've never really heard of companies that admit that they paid ransom in order for them to protect this data because they speak of data breaches, but at no point do they say what happened, why it didn't go bigger, why monies were not stolen, why information was never released. And sometimes it does get released in places like the dark web and spaces like that, but often it doesn't. But no one's ever told us how they don't do that. So maybe there is some secrecy in terms of do they pay or do they not pay?
This is going to move in interesting ways. And in the end, the hackers are the ones who seem to be in a more powerful position unless there's really dedicated international kind of government initiatives. And I mean, by which I mean, you know, Russia and the US working together kind of thing. I don't think that's going to happen.
Unlikely, not anytime soon. But at the same time, that type of cooperation is definitely needed because what tends to happen here is that hackers are unlikely going to sit in the country of the organization that they are hacking or the government that they are hacking. Because when you think about it, it's like just about or many presidents, including our president, have had their information leaked in the past through this method. So they're unlikely going to sit in South Africa if they know that the target is the South African government or the target is a South African organization. So that collaboration is definitely needed between different companies or entities that exist in different parts of the world in order for this to be protected a bit better or in order for even policies to be drawn up a bit better and to answer to the current needs and the changing trends of the direction that tech would be moving to.
Siphumelele Zondi, thanks very much indeed, a tech expert. Really do appreciate the time on The Money Show. 18 minutes now after 7.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
The Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. A comment from the Deputy Finance Minister, David Masondo, today that the budget scheduled to be announced next week, the 21st of May, will definitely happen and that there'll be No Budget 4.0. Obviously, for smaller businesses, the budget can have quite a big impact. Rufilwe Monageng is the Chief Executive of the Black Entrepreneurs Alliance. Rufilwe, good evening. Good to have you on the Money Show tonight. Do you have any hope at all that there'll be anything in the budget that will help smaller firms?
Well, thank you, Stephen, and to the world-class Money Show. It's a debut for us as Black Entrepreneurs Alliance, and we're grateful for the time. So I'll tell you that we believe that the interview will, the budget speech will take place next week. And something that's interesting, Stephen, based on your question, is that I don't know if you're aware that according to the Public Finance Management Act, it addresses the tabling of the budget by the minister in Section 27, specifically Section 27.1, which mandates the minister to table the national annual budget in the National Assembly before the start of the financial year, or on a date as soon as possible after the start of the financial year. Now, you must appreciate that we're already 2 months into the financial year. The implication it has for us as small businesses that some of our entrepreneurs, members, and ourselves are owed by the government since last year. And the government had said that they don't have money, so they rolled it over to this financial year. Now, the impact it has, where some of us had to scale down, some of us had to close down, some of us had to retrench, and had to renegotiate and make unfulfilled arrangements with the banks, with all our creditors. And that has an impact on the credit score, thus finding that a lot of entrepreneurs are now being blacklisted. And this budget 3.0, we hope that it would assist in ensuring that it unrolls and the implementation, especially of the Public Procurement Act, and I'll speak more about it in a moment.
I mean, for so long we've had this government, I mean the one before it too, but all of the members of the coalition in this government saying, and the president speaking for them, saying that, you know, growing the economy was the big thing, creating jobs is the big thing, key to that is small business. And you would think, okay, we've got a long list of problems, that's fine, but start the budget, start the State of the Nation, by the way, too, with that promise, and then fulfill it. And we don't see that. I mean, there's academic research now suggesting, and I love this line, we don't have a startup culture, we have a registration culture. People register a small business and that's all they can do because the environment is so difficult.
You know what? That is so spot on. We do a lot of people. I mean, you look at even the Black Entrepreneurs Alliance, we have elderly people that have been retrenched. I mean, I'm talking about people over 40 that have been retrenched since COVID. You must also appreciate that we don't have an entrepreneurial culture in South Africa. And therefore, that's why even with the spaza shops, you will always cry foul to say foreigners are taking our shops. It's because it doesn't even start at school to harness that culture. And now, how do you do that? It comes with education, and then empowerment. Now, empowerment comes with aggregation of opportunities. If you look at the Public Procurement Act, there's a section where it speaks about set aside. Now, in the set aside, Stephen, this is where we are looking not for handouts, but we're looking for hands up to say government must assist our people to be set up for success. I'll make an example. And we, as Black Entrepreneurs Alliance, we want the government to use this as a benchmark. There's a project, Stephen, think about this, right? A 27 billion rand project in the south of Johannesburg called Southern Farms. Now, one company has won that tender for 27 billion rand. It's fine. We've got no problem with that. Now, if we do our own math inside as an organization, we're saying that if you say 10% of that amount of money, it's profit, which is 2.7 billion, and then the remainder of the amount aggregated and make it inclusive. And we're asking that it should be inclusive on the basis of broad-based Black economic empowerment, because the current state of events is the individual-based economic empowerment. We are economic spectators. There's someone who wins a tender of 27 billion rand, and all of us must just clap like we in a soccer match as spectators. So we want in. It needs to be aggregated. You think about this, Stephen. If you aggregate it, there's someone who just supplies door handles. Imagine you supply, and there's someone who does fitting of door handles, and then windows, paving, painting inside. I mean, just doing painting outside. And then you do the roads, so there's so much that you can aggregate, and it can be done through aggregation of tenders and using the Public Procurement Act set aside. Furthermore, this has been done by JRA between 2008 and 2012 through a program called Josie at Work. And why that is important, and we feel strong about that, will ensure that people get to have bread in every house, and will ensure that we can afford to buy electricity, to buy data, to pay for water, and ensure that the state of living in our country becomes better. Because at the moment, I mean, you look at even the recent statistics of unemployment, a lot more people are being unemployed, and they're thinking of entrepreneurship. Now, how do you ensure that you include them through broad-based black economic empowerment? And now we're not only saying black people, but we're also alive to the fact that we are a mixed race country with whites and so on. So we are saying, in terms of uniting the country, let's ensure that it becomes broad-based, but also include white people in that mix, so that we build a united economy and a progressive country.
There are other things to all of this. I mean, government always says it's going to cut red tape, for example. I don't know if it's really done that. And what we're also going to see now, and I know, Rufue, you support the transformation fund that the Minister Parks Tau is proposing. This is the sort of 100 billion rand fund. And there's opposition to it. And there's opposition, I mean, even from people who would support transformation, right? They're just very worried about the government managing that kind of money. I don't want to have an argument with you about whether the fund's a good idea. What I want to ask is whether the fact we argue all the time as South Africans is stopping us creating jobs.
So this is where we need to, and the president must hold, and in fact you're giving me an idea to write to the president and maybe the deputy president as the leader of government business, to say that the Department of Public Service and Administration, they need to support small businesses and entrepreneurship through effective implementation of government policies and programs, and also the Department of Monitoring and Evaluation, because you got this department. If you ask anybody of the listeners of 702 and your program to say that, does anybody know what is the role and have they seen the Department of Monitoring and Evaluation at work? Do you know a lot of people are currently struggling, and while we're making mention of public service administration, a lot of government employees think that it's their father's businesses. And why am I saying this? They don't answer phones, they don't respond to emails, and when you complain, I've even complained to the Public Service Commission to say, service, can we have a service, please? Because if people don't respond to emails, people don't respond to calls, people don't deliver the services that they have raised their hands to say, please elect us so that we do this. Now we must fight through the public protector for them to deliver. And now I hold the Department of Public Service and Administration to ensure that implementation of these laws is aggressively done. Not now, but right now. And also the Department of Monitoring and Evaluation to ensure that they monitor. Have they ever driven around in areas like in Diepsloot, in Honeydew, and observe the disservice that our people and our entrepreneurs and small businesses are getting? And when you try to complain and apply, even for this finance that we support, at the moment we support it, but we are saying through public service and monitoring and evaluation, let's ensure that there's no corruption, it doesn't go to relatives or people that are connected. And most importantly, it benefits South Africans, even those that don't have an opportunity to be speaking to yourself, Stephen, and those that can even write an email to the president or any other minister.
Rufue Moracheng, thank you so much. Chief Executive of the Black Entrepreneurs Alliance.
The Money Show.
Investment School.
The Investment School is brought to you by CFI, a leading global trading platform now available in South Africa. CFI Financial is an authorized financial services provider. Well, earlier this week, you would have heard a conversation on The Money Show with the company Greencoat Renewables. They're a company that provides renewable electricity to utilities and firms. They're currently based in the UK and Ireland. They're listed on indices there. But now they've applied to get a secondary listing here. In other words, they want to be listed on one of the exchanges run by the JSE as well. So how do secondary listings work? There are quite a large number of them, actually. If you look around the JSE, I can think of other examples. I think Bytes might be one of them. There's several in different parts of the index. So why do companies do this? Gary Boysons, Director at Rand Swiss. Clelo Giyose is the Chief Investment Officer and Principal at First Avenue Investment Management. Gentlemen, as always, thanks so much indeed for coming in and sharing your wisdom with us. Clelo, let me start with you. So there are some shares which are easy for Stephen to understand, right? You can have a Capitec or a ShopRite. They're listed here. Their businesses here. They buy things from South Africans and they sell things to South Africans and they do it very well and they have a share price. Right. So that I get. That's obviously the primary listing. Yeah. What is a secondary listing?
Well, secondary listing is a, for lack of a better word, a second listing. After a primary listing. A primary listing is where you are mainly listed in whether here or somewhere else, which is mostly where your market is made, where the shares get traded primarily in larger volumes and larger quantities, where you choose to be under the oversight of that stock exchange primarily, and then you may want to have a secondary listing somewhere else because maybe the assets that are now a significant part of your business are in that country where you have a secondary listing. So to give investors in that market access to that opportunity and the economics there, you list on that exchange too. But it's primarily to list in a place where perhaps the majority of investors understand the asset. Because in your primary listing, some investors may not understand the risk that you're taking in South Africa, and so maybe may not fully appreciate the share price or appreciate the economics of your business. That said, there cannot be differences in value between the primary listing and your secondary listing. The shares will go up and down really in unison, right? But where the asset is and the universe of investors that understands it the most, that's where the share price is going to be driven primarily.
Gary, okay, so just to get a couple of things out of the way in my head, when the shares move up and down, that's just because the value is moving up and down organically. They're not linked to each other electronically, right?
Oh, that is a great question. So when I first started in the markets, one of the things that we used to do, not when you got bored, but you'd have it on your screen, was to watch the dual listed stocks and see if there was any price discrepancy, because back then there weren't the advanced algorithms that you will keep it in place. But essentially, if a dual listing, the share prices, let's say in London and South Africa, change, are out of line, that's an arbitrage opportunity. So you can make risk-free profits. You can sell in London and buy in Johannesburg. You're essentially buying and selling the exact same thing, just at different prices. So you can kind of lock in your profit instantly. Now, that natural market dynamic will force the two share prices together. So it's not that there's a market maker on it like you would have with an ETF, where there's just not the liquidity in the stock, and there's actually has to be a bank or market maker sitting on it saying, well, there's no one actually trading the stock, but I'll put up, a bid and an offer of a certain size so that the investors that are, participating in this product can buy and sell, and I'll just move my bid and offer and do the hedge in the underlying securities. Most dual listings, that price stays together because of very natural forces. As soon as it moves out of line, there's risk-free profit on the table. And these days, with the algo-driven trading, humans can't even take advantage of that anymore. It's a couple of cents that it will push out one way or the other.
Okay, that makes sense. The idea of listing your company on the stock exchange is to access capital. You need money to invest in your company, and that's why you sell shares in it. So, Hello, if in Johannesburg, for example, you're a mining company, South Africans understand the mining market, say you're a gold mining company, we have a deep history in it, why would you not just, as a South African mining company, issue more shares on the JSE rather than have an alternate listing in London?
Oh, yeah. I mean that's a good question, because look at BHP Billiton as a good example.
Yeah.
BHP Billiton, it's not called Billiton now, it's just called BHP, does not have any assets in South Africa. The company left the country
years ago.
I think around 2006 or 7. Sold their last asset, and they were really smart about it. They went to the president, talked to him. We're doing this BE deal. We're doing this.
It's Tony Traha and all the rest.
Well, I was Anglo American. Tony Traha.
Yes, of course it is. Yes.
Chip Goodyear, I think he was the last CEO. He has CEO that had an asset in South Africa. Now, think about it, BHP. That's a global behemoth. It's a giant company. No assets in South Africa, right? But they had a listing here, Australia and London, right? They had assets in Australia, no assets in London, but deep capital markets in London, right? So, why go to London if they were listed here in the first place? Well, because there are people called developed market investors who may not have a mandate from their clients to invest in an emerging market. So as beautiful as BHP Billiton might have had it here, or even in Australia, right? If there was a mandate out there, and there are mandates, right? The largest pools of assets are chasing developed markets, right? Then it means BHP Billiton would be out of touch for that universe of clients. But really, that's what the big money is. So BHP Billiton, Joburg means nothing to BHP Billiton. I actually don't really know why they're still here, honestly. I mean, I don't want them to leave. It's great. It gives our stock market size, gives us liquidity. But BHP Billiton is really good. BHP is good for emerging market investors here to access. It's good for developed market investors in London to access.
Gary, if you are listed on the JSE and you want to have a secondary listing somewhere else, does the JSE have to allow you to do that?
That's a good question. I'm not actually sure.
I
would assume they would have to sign off, and it would be part of the listing requirements to make some sort of disclosure as well. But I think it's
foreign exchange controls too.
Yeah.
Sorry?
Foreign exchange controls too. The Reserve Bank has to allow you to do that because you'll be paying dividends, so the money would leave South Africa to go abroad. So you get a whole slew of regulatory approvals from the government and the JSE.
And also when you list in one the first time, you could also include it in whatever sort of agreement, I imagine, that we might one day have a secondary listing. And I presume also that the rules governing most of these stock exchanges are almost exactly the same anyway.
Not quite. I think that the New York Stock Exchange has the most stringent rules. Just so you know, the New York Stock, the SEC, I should say, really wants for Chinese companies to open up completely and be governed by the same standards that govern American companies, and the Chinese government is refusing to do that, right? Chinese government says, well, if you can invest in Hong Kong at our standards, why can't we just take those same standards and use them in New York? And I think this year or next year, a lot of Chinese companies, about 1,000 of them, are going to be kicked out of the United States. It's very strict.
That's a very interesting point, actually.
Yeah.
What I was trying to get to is that share prices are going to go up and down together, and by and large, in most open kind of stock markets, shares are going to be managed by roughly the same set of rules, apart from obviously that example. So they operate in the same way, is the point I'm trying to get to. Okay. Do we see that different companies in different sectors are more likely to do this? So are miners more likely to do it than banks, for example, Gary?
I think, yes, there's a slight tilt towards sector, because banks, unless they've got serious multinational operations, would tend to list in the country that they're operating in. But it's certainly not dominated by the mining sector, for example. But typically you would look at more multinational companies because and also I think it's rather than sector, it's probably more to do with scale as well. Like that you need to access these deep pools of liquidity. And I mean, if you look at the Naspers process listing, for example, one of the arguments behind going and listing in Europe was that our capital pool just wasn't deep enough to correctly value the share price. So I think rather than sector, it's got to do with size. And there's all different reasons that you would have a dual listing. So obviously we've got a new listing coming in to the JSE. It looks like it will list now, called ASP Isotopes. And it's going to be an inward listing, which is a secondary listing. And it's a NASDAQ listed company at the moment. We're getting a secondary listing on the JSE. And it's really because the operations are in South Africa. There's, I think, 3 factories in Pretoria. It's like 98% of the staff are South African. So that's one example. But you've also got the example of MTN, for example. And that, obviously we had those, huge NCC fines.
This is in Nigeria.
And it didn't have a listing in Nigeria. And it was being targeted as a foreign company coming and exploiting Nigerians. And I think it was the second largest operator in Nigeria. But then by having a secondary listing in Nigeria, allowing Nigerian people to access that investment opportunity, allowing them to benefit from the dividends that MTN Nigeria is generating, suddenly it becomes a lot more difficult for the regulator now to target them as a foreign company, because the Nigerian people are actually benefiting from this. So there's many reasons, and it's not, I wouldn't say it's necessarily sector specific, but rather I'd say operation specific and very much to do with size as well.
It's the ultimate example of giving people ownership to stop the trouble. I mean, it's ultimate, really. It's very, very clever. So Khlelo, this issue around capital pools and money, this is where I scratch my head a little bit. So the idea of issuing shares is to get capital.
Mm-hmm.
Okay. So I can understand Naspers, listed on the JSE, massive global company, Tencent, et cetera, going to Europe because there's more money there, and particularly with the exchange rate differential between the rand and the euro. In the case of Greencoat Energy, which is what started all of this is the alternative energy provider in Europe. They're already listed in Ireland. They're already listed in the UK.
Mm-hmm.
They don't have operations here. I did ask them earlier in the week. But they're going to invest here for our capital pools, but you're dealing in rand, which is much weaker. So I understand for a South African investor the opportunity of maybe investing in a European based company. That I get, diversify.
Yeah.
What I don't get is there really enough money in ZAR to make a difference to them in euros?
I'd be interested in hearing what reason they gave you for them coming here.
They said it was because they wanted to access our capital markets.
I don't think I don't think they were being frank with you. I think that there's probably another reason, which I really don't appreciate personally, meaning that I don't quite understand it. But I will tell you this, that the Toronto Stock Exchange, for instance, is really well known for being very receptive to extreme amounts of risk in the mining space. So speculative mining companies list on the Toronto Stock Exchange, and there's a pool of investors there. So I think it might just be to do with accessing a particular risk profile of investor, right? If you were to take a speculative mining company and put on the JSE, I think it will get an investor in it. I think they'll access that pool of assets. That pool of money is larger in South Africa. It's largest in the Toronto Stock Exchange. This company probably feels as if, for its risk profile being extremely nascent, the appreciation of what they're doing measures the risk appetite in South Africa. It's not so much the size of the South Africa stock market versus Ireland or UK, it's just the risk profile of their business matches the risk that we want to take here.
I find it so interesting because money is so international now, and information is so international now, that you would think that kind of differential between sort of jurisdictions wouldn't be quite as strong as it once was. I mean, you would think that actually, when information asymmetry, gosh, listen to me.
Very good.
When you don't see that much anymore, that wouldn't really happen so often. That it wouldn't matter where you list.
I think that also the way that money is, look, the largest pool of money in the world is institutional money, pension money, right? Pension and endowment fund. That's the largest pool of money in the world. And people and the owners of that capital, when they allocate it to managers, they split it into two. They say these are developed market. This part of money is for developed markets, which is the largest part. And this part of money is for emerging markets, right? So here you go. They allocate it to different managers, right? Now, if you're at this company, Greencoat, you say to yourself, okay, I'm not getting that much joy from developed market investors. My share price is languishing. It's not getting appreciated, right? Let me go and access emerging market investors because there's a pool of money for that. And maybe I'll get better appreciated that way. So oftentimes it's just a split in specialization between developed markets and EM. The risk profile matches one of them.
Maybe we're just better.
Maybe.
Khlelo Giyose is Chief Investment Officer at First Avenue Investment Management. Gary Boyson's Director at Rand Swiss Investment School tonight. Alternative listings. Why? Next, how to take advantage of them. You with The Money Show.
The Money Show.
Investment School.
Continuing the conversation around alternative listings, Khlelo Giyose is Chief Investment Officer at First Avenue Investment Management. Gary Boyson, Director at Rand Swiss. Gary, just, when people are searching for capital, is there something about the JSE that maybe makes it particularly attractive, despite the fact that, the Rand isn't as strong as the euro?
Yeah, it's the Rand. I mean, when you look at the currency, that's always going to be translational as well. So yes, the rand can weaken, but if you're buying solid assets, if you're buying something like BHP or that, and the rand weakens, you can still get your dollar price performance. So the currency I don't think is as important, but I was trying to get the exact number. Now this number moves around all the time because market caps move around all the time. But the JSE punches surprisingly above its weight in terms of market capitalization. And I think, and I stand to be corrected because I couldn't find it, we're definitely in the top 20 largest stock exchanges in the world. I think we're sitting either at 16 or 17 at the moment, which, considering the size of our economy and the size of our population globally, that's pretty incredible. Just another point to follow on with the point about institutional money and pension money. Our pension system is almost the same. So our pension system is also punching a long way above its weight in terms of the pool of savings that it is able to invest. So as much as it seems crazy to come to a small country like South Africa or a very frontier or emerging market, our systems and our exchange is very, very developed, which I think is a huge positive.
It makes it very attractive. Okay, so for investors then, I mean, how do you take advantage of alternative listings? And clearly one of the things is that there are big international companies that will be listed on the NASDAQ or London or whatever that will be listed here that you can access quite easily.
Sure. I mean, but if as an individual, if you're interested in investing in some of these sort of companies, I think it's a great opportunity for Gary to punt his business. Speak to a private stockbroking business, private client, private wealth. Those are the folks that can get you access to the line, because some of these companies also are not going to be very liquid.
Yeah.
Right. So they'll give you lines of liquidity, but they'll put you into companies hopefully that have a better chance of making it. I mean, so often I've seen some of these alternative secondary listings that come in here from Australia. 6 years later, they're gone, they've disappeared, and you have no idea whether or not it was a successful listing, whether money was made, or you have absolutely no idea.
That must be a major issue. Is it worth, when you have, Gary, alternative listings and you look at what companies are doing, is it always worth being very careful to look at their motives, or would you accept it in the same way as actually safer because it's already listed already? Is it a safer bet?
Well, I suppose the company itself, you've got a claim on the same assets, and as much as the regulation is similar, you have two different authorities looking at the underlying business. I mean, we saw it, when Steinhoff was looking at German listing. That's where all the nonsense came out. So yes, I suppose it would add some protection as well. But just to kind of further comment that you made earlier about the asymmetry of information and the idea that capital can flow very freely. That's not true, unfortunately, in South Africa specifically. Very true in the rest of the world, but we still have incredibly strict exchange controls, specifically on private clients. You can take out your 1 in 10 million. And what a dual listing does for you, where the opportunity is there, and it's how you would construct your portfolio. We have some of the best mining companies in the world, the BHPs, the Anglo-Americans. You have access as a local investor to those without having to use a foreign exchange allowance, without having to deal with cross-border currency flows, without having to go to the Reserve Bank and argue with your authorized dealer about whether or not these funds can flow. So it gives you a very simple access. And also in the South African world specifically, if you have a local company or local trust, they don't have offshore allowances. So you've got to set up an asset swap. Those asset swap add fees to you. Whereas it's something that we see a lot when we compare portfolios, that a lot of the local managers might have, like the private client stockbroking managers, they understand Naspers, they understand Tencent, they understand these businesses. So the client ends up going into an offshore portfolio and they end up buying Tencent or they're buying BHP. And we sit there going, what on earth is this? You have access through the dual listing here. You don't need to externalize your funds to go and buy a business that you can access through the local exchange. It's a total waste. You've added cost for no reason. So that's where the opportunity, I think, for South African investors. Look at your portfolio as a whole rather than just these isolated elements of it, and use your South African stockbroking account to access these incredible international dual listed companies. They give you rand hedge exposure. They're cheaper to access. Your custodian fees are going to be lower. And then use your international account to go and access things that you can't access here. And that's the Alphabets and the Teslas and the more, for us, the more aggressive tech companies.
Very quickly, Cleo.
I remember we lost money on a company called Independent Power South Africa, which is listed on AIM in London. came to list here. It was the first IPP in South Africa. Eskom never gave it a trading license. We lost money on that. I remember that.
Hlelo Giyose, the Chief Investment Officer with some sad, long memories at First Avenue Investment Management. Gary Boyson, Director at Rand Swiss.